Pablo, good to see you, brother. Your first one in today. How you been? Evening, Miles. How's things? Artistic, good to see you as well. How you doing? How you been? Things are good. These past 2 days have been very busy. Hello, Miles. Hope you're well with it. Thank you so much, Steve, for that. I'm doing good. Just a little bit tired, but on that, I'm doing good. Good to see you as well. How you doing? How's things? Morning, Miles at CMF. Shelly, good to see you as well. How you doing? How you been? Good evening, all. JP, good to see you as well. How you doing, brother? By the way, thank you so much for everyone who's straight away liking the live show, putting comments outside. I do appreciate that a lot, and retweeting the live shows as well. As I explained yesterday, the new policy inside the CMF is like and retweet if you expect me to reply back to people, to your messages or to your phone calls, essentially. It's the new policy inside the CMF. It's, you scratch my back, I scratch yours. Good evening, Miles and CMF. Good to see you all, friend forever. How you doing? Jason, good to see you all. How you doing? Good evening. Hey, Miles, I messaged you on X. I will check it out after this live show. Apologies about that. I'll check it out straight after this live show. Now, let's do intro, disclaimer, what we're going to talk about on tonight's live, and then we'll go back to the comment section. So, here it is. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. long time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into this digital world. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. This is episode 456 of the CMF live show I was watching right now. And on tonight's live, we're going to be discussing these topics. We're going to be discussing essentially Bitcoin holding somewhere around $70,000, which is quite impressive. But it also does go back to me saying, this war is very different compared to any other war. Then we're going to talk about essentially the price of oil rising and what that in comparison could do towards the crypto space, because we're seeing signs of it so far. Then we're also going to be talking about the ban on CBDCs, which we discussed a few days ago, but today it was passed in some sort of a way. We're also going to talk about essentially Kathy Woods today on tonight's live. Kathy Woods is one of the biggest Bitcoin advocates, just like Michael Saylor is, but her recent opinion is quite interesting. We're also going to talk about tonight's live regarding one of Asia's biggest, essentially, Bitcoin buyers, a replica, you could even say, of Strategy, Meta Planet, and what their next moves are inside the crypto sector. We're also going to talk about essentially oil getting tokenized. It's a huge industry. If the energy industry decides to get tokenized, which at one point they have to, it is massive. And one particular firm is thinking about it. We're also going to talk about tonight's live regarding the SEC and CFTC coming to some sort of conclusion that it's better to work alongside each other than to against each other. We're also going to talk about tonight's live regarding BlackRock, essentially, and staking. We're going to talk about tonight's live regarding Avalanche's, essentially, business chiefs' newest perspectives on the crypto market space. We're going to go for news on tonight's live regarding JP Morgan and some Ponzi schemes. We're also going to talk about tonight's live regarding Ripple, as we always do. Those are essentially the news topics we're going to discuss in tonight's live. The first one essentially being Bitcoin impressively holding somewhere around $70,000, while the rest of the market is feeling the pain of the energy crisis situation from the Strait of Hormuz. Now, before we talk about that, let's go start a conversation first. This was happening there, and straight into the first news on tonight's live. So let's see where we were at. We were here. Let's go, JP. Let's go. Hey there, Miles. Good to see you as well, Davey. How you doing? How you been? Hi, Miles, CMF. Mike, good to see you, brother. How you doing? Thank you, brother. No problem. Any time. Even Miles, CMF. Manny, good to see you as well. How you doing? Even Miles, CMF. Joe, good to see you as well. How you doing? Another week of staggered May. Yes, pretty much. Now, the energy crisis situation inside the Middle East is getting worse. Regarding Iran, US, and Israel, it's putting pressure on, some analysts are predicting that we could go into some sort of a crisis, worse than essentially, everybody went through COVID pretty much. It could be leading to a massive financial crisis. They're suggesting there's so many on the table. And the furthest one, which I don't think is going to happen in any sort of way, is the idea of a World War III nuclear essentially war. That is pretty much, for me, is off the table. Nuclear war is not going to be happening. That's pretty much off the table. But the rest of the ideas, essentially we could go through a worse period than essentially we went through COVID, a financial crisis, a recession. These are all the ideas on the table due to what Iran is doing. While the US and Israel are striking essentially, the Iranian bases, the IRGC bases, their military essentially, their Basiji essentially, the police checks that they're doing, the US and Israel are doing very targeted strikes. Whereas Iran is still targeting the Gulf countries. Today, they hit an oil refinery, which essentially is making it worse for the energy crisis of the world. Iran is, putting more pressure on the Strait of Hormuz, which is causing oil to essentially go through some shockwaves in price. It's, oil is getting more expensive than it ever was, essentially, even during COVID, you can say. So it's the highest we've seen so far. Iran is saying that they're going to be pushing the oil markets up to $200 a barrel. That could cause essentially, upwards of $200 a barrel and beyond. That could cause a massive energy crisis. Iran's government is hanging on to its last thread, you could pretty much say. And they are doing everything they can to still stay in power. And they know it's their last few days in power, or last week in power. So they're doing everything they can. And they've also decided to start striking American companies in the UAE, in Istanbul and Turkey, in Saudi Arabia, in Qatar, in Bahrain. Every American company, from Google to Microsoft to IBM to Nvidia to essentially Palantir, all these companies have essentially their employees had to exit the buildings pretty much, and I'm guessing work from home, because Iran is now going to be targeting offices in these countries. And essentially, as I said, in the cities of these countries, Istanbul, essentially, Dubai, Saudi Arabia, Qatar, Bahrain, all these countries, all these offices are the next targets of Iran, alongside hitting energy, essentially, which is, oil refineries and so on, which pushes the world on edge. Everybody's starting to see the true colors, you could pretty much say, of the Iranian regime. And it's not a nice color, and it never was. But it's nice to see is that some people in the world are starting to come to the conclusion that this regime is vicious, and that the image that they give sometimes on CNN, that this Iranian regime is a peaceful regime that just wants to live and breathe alongside everybody else. Some people are starting to see their true colors, because while, as I said, America and Israel are starting to target, not starting to, but since the start of the war, they targeted essentially strikes on military bases and police bases, and also essentially Basiji places, whereas Iran is targeting office blocks, hospitals, hotels, luxury villas, anything they can pretty much target in these countries. Do you see the differences between the targets the Americans and the Israelis are doing compared to what the Iranians are doing? And the threat that they sent out to the world today on Iran International, which said they're going to put the world through a massive energy crisis situation, which could cause recessions. It could cause so many essentially catastrophic things for the world. It just shows you that they will do anything to stay in power, and they know that their end of time is coming pretty much. But it's nice to see that the world is slowly starting to see, that the Iranian government is not this peaceful, thing that they show on CNN. It's actually quite vicious. And not only does it, essentially take out its own people, but taking out other innocent people around, the Middle East is perfectly fine for them, as long as they can stay in power and move on with their agenda, which is the stupidest agenda the world has ever come across. Now, on that note, why am I sharing that with you? Essentially, it's because the oil situation is putting pressure on stocks, is putting pressure essentially on other aspects of Wall Street markets and S&P 500 companies and AI companies, and so on. But the crypto space is holding remarkably well, you can pretty much say. So here it is: Bitcoin holds near $70,000 levels as surging oil prices and credit issues have stocks tumbling. Another issue with the credit situation is that companies don't know that if they should be lending money or not, because of the energy crisis situation and the Strait of Hormuz situation. Companies are, what they described it on essentially ITV News or essentially other news channels, is stagflation. They don't know what to do next. Companies are on edge right now. They don't know if they should start lending and borrowing, or get more involved in the oil industry, or do whatever. They're just right now watching to see what happens next. And that's why stocks are doing terribly, bad, and the rest of the market space also, whereas crypto is remarkably standing its ground. It all does have to do with when I said before the war started that this war is going to play out a little bit different than any other war, because the Iranian government is money laundering during this war. Mainly because they know that when the time comes, they all have to leave the country and fled the country. The Iranian government has to leave the country, and they're going to be leaving with billions of dollars in their pockets, and they can't be taking it. Well, some have tried actually taking it in suitcases full of cash of $100. No word of a lie. But some are doing it through crypto, and that's why crypto is still holding its ground. And it was revealed that the Iranian government is holding, essentially, it's the wallets that were revealed was Bitcoin, XRP, and USDT on the Tron network. So Bitcoin has demonstrated remarkable resilience in the face of a broader market instability, maintaining its foothold at the $70,000 level and somewhere near it, despite the significant downturns in traditional equities. As surging oil prices stoke inflationary fears and emerging credit issues began to weigh in on the corporate sector, the old guard of the stock market is seeing a notable, essentially, retreat. This divergence is being viewed as a critical flipping of the switches in investor sentiments, where the financial plumbing of decentralized assets is being tested and so far holding firm as potential hedge against the volatility currently plaguing the legacy systems. Crypto is showing good signs during this war. It's not doing what it traditionally does during a war, which is plummet into the ground. The current market environment is highlighting a shift in how digital assets are perceived within the 2026 digital economy. This is a lesson for the world also to see one last time how crypto reacts during times of war. Previously, reacted quite poorly. This time around, things are a lot more different. We have a lot more institutions inside the crypto space. We have a lot more governments inside the crypto space. We have a lot more regulations on the table, and some passed in different jurisdictions around the world. We have a lot more ETFs inside the market space. We have banks involved inside the crypto space. So there's, crypto has reached quite a, achieved quite a lot this year. So, relative to strength versus equities. While the S&P 500 and tech-heavy indices are essentially struggle with rising input costs and banking blockades of tightening credit, Bitcoin's stability suggests it's decoupling from high beta risk assets and acting more like a sovereign settlement, essentially, layer. Credit companies are no longer giving out credit to people. As I explained, it's because to do with the Strait of Hormuz, it's because with the energy crisis and so on, and credit companies are having a difficult time borrowing and lending money. So somebody has to fill that gap. Crypto. Things are playing out very different during this war. A lot more different, as I said, to any other war. Credit companies are struggling, so somebody has to fill the gap when it comes to lending out money or borrowing out money and so on. Crypto's filling that gap. It's going to bring so much liquidity inside the market space, it's going to be unreal. As long as the credit issuers sit on the sidelines. Inflationary pressures and resilience. The spike in oil prices is typically a headwind for the economy. Yet Bitcoin is attracting capital from those seeking on-ramp into assets with fixed supplies, a move that aligns with long-term stability goals discussed with the Genius Act. Flight to transparency. Market observers note as credit issuers create essentially are stuck in traditional essentially banking, the transparent on-chain nature of the ledger essentially provides a high utility alternative that meets the rigorous reporting standards of the US Clarity Act. As the disconnect between digital and traditional markets widens, analysts essentially are closely watching for signs of unconditional surrender of the old correlation model. In other words, the crypto space are right now, and analysts are watching essentially to see if the banking system is going to fail everybody during this crisis of energy crisis, of the Strait of Hormuz being closed, of Iran striking American essentially offices and so on. Analysts are watching right now. High-profile analysts are watching right now on how the traditional market space is reacting to this massive catastrophic scenario, whereas the crypto space is trying to calm everybody down and start providing services the banks once used to give out during times like this. If Bitcoin continues to hold these levels and cryptocurrencies continue to hold this level, following Bitcoin's footsteps, The narrative that the 2026 global economy is entering a phase where decentralized networks provide a necessary buffer against macroeconomic shocks for institutional and retail, essentially, participants alike. This period of relative, essentially, strength serves as a powerful validation of the network's maturity and its growing role as a cornerstone of the modern financial infrastructure. Things are a lot more different. Things are starting to look interesting during this war for the crypto market space. It's honestly proving to the world that if the banks and the credit issuers can't provide you a service because they're afraid of what the rates are going to be, they're afraid of the Strait of Hormuz being closed, and ships that do want to go past are also afraid of, getting attacked or going through a mine. They're afraid essentially of, could this turn into a bigger catastrophic scenario? They're afraid of a recession. They're afraid of a 2% up or 2% down that could cause the markets to go through massive shockwaves. And crypto is holding its ground, and analysts are paying attention during this time that crypto is holding its ground while the traditional market space is struggling to hold its ground. This is positive. There's another reason why crypto is also holding its ground. As I explained before this war started, the Iranian government is money laundering. So crypto is definitely holding its ground while money is being flowing in, essentially flowing into it like liquid. Now, on the topic of oil prices, because it causes, shockwaves. So here is what $100 oil means for Bitcoin networks and for cryptocurrencies in general. The recent surge in global energy prices, with oil essentially crossing the $100 barrel mark, is creating a complex set of ripples across the networks, the crypto networks, the Bitcoin networks. Historically, rising energy costs have placed immense pressure on the financial plumbing of the mining sector, as electricity remains the primary input for maintaining the security essentially of the ledger. However, in the 2026 digital economy, this price milestone is also accelerating and flipping of the switches towards a more innovative off-grid energy solutions that allow miners to bypass the traditional banking blockade and energy constraints of the legacy system. The intersection of high energy costs and decentralized networks is driving several key industry shifts. The efficiency arm race. Sustained high oil prices are forcing an unconditional surrender of older, less efficient hardware, as only the most advanced high utility essentially machines can remain profitable under the current essentially electricity rates. Energy essentially integration. Many large scale operations are responding by deepening their integration with standard energy and flared gas, turning essentially a byproduct of the oil industry into an on ramp for zero emission mining power. As rising oil prices fuel global inflation concerns, Bitcoin's relative strength is being tested as investors essentially look for assets that can operate outside the traditional inflationary spirals regulated by the old god central banks. As the market adjusts to the high cost environments, the resilience of this hash rate suggests that the network has matured significantly since its previous energy crisis situations. Analysts also suggest that the provisions within the Genius Act are encouraging miners to become demand essentially response partners for the grid, helping to stabilize the energy prices for the broader public while securing the blockchain. Ultimately, $100 oil is serving essentially as a catalyst for the Bitcoin network to prove its utility as a flexible and adaptive, essentially, piece of modern infrastructure capable of thriving even when the cost of legacy world becomes increasingly, essentially, volatile. So, out of all the crypto projects, Bitcoin is feeling the pressure more compared to XRP, XLM, XDC, Ethereum, AVAX, and so on. The reason why essentially Bitcoin is feeling pressure more, energy crisis. As essentially the missiles are hitting oil refineries, that also happened today, causing the oil essentially prices to skyrocket. And Iran is even saying we're going to push it above $200, which is going to cause massive essentially energy crisis situations. It's showing that can Bitcoin hold its ground? Because if it's not efficient for these Bitcoin miners to go ahead, if the energy crisis situation is going to happen, the price is going to skyrocket for energy, how are they going to continue mining Bitcoin? Is it even viable to essentially to mine Bitcoin? Is it profitable to mine Bitcoin? Whereas the rest of the crypto space, like XRP, it's all pre-mined. Solana pre-mined, AVAX pre-mined, HBAR pre-mined, and so on. So they don't really get affected by energy crisis situations. So the test right now is, you could even say, we're very close to decoupling So if Bitcoin goes through a crisis because it's not profitable for Bitcoin miners to continue going forward, if we reach $200 barrel and up, then could the rest of the crypto space decouple from Bitcoin's footsteps because they're not going through an energy crisis? For example, XRP essentially the XRP ledger could provide liquidity for the market space. It could provide credit for the market space, even during high energy price situations, even if it's a $200 a barrel. The XRP ledger could still provide credit. It's all pre-mined. They won't go through a shock. So essentially, similar to essentially XLM, XDC, HBAR, AVAX, Solana, Ethereum, they're not going to go through some sort of energy crisis either. They're all pre-mined pretty much compared to Bitcoin's network. So this is like, for example, crypto versus the traditional markets, banks and credit issuers versus the crypto space, and the rest of the crypto space versus Bitcoin. This is what's happening right now during this war. Those are the three things happening right now. Crypto versus traditional markets, crypto versus essentially banks and credit issuers, Bitcoin versus the rest of the crypto space. Three issues happening right now. So let's see how it all plans out or plays out essentially. Moving on from that to the US Senate. Before we talk about the US Senate, let's move to the comment section first. Let's see what's happening there and straight into the next news. So let's see where we were at. Miles, is it true that Coinbase is delisting 25 crypto coins? I haven't heard about that in any sort of a way. If they are, they probably have their reasons of why they're at least delisting 25 crypto coins. And I don't, if they are actually delisting 25 coins, it's probably because they have low liquidity, is typically why exchanges will delist crypto projects, or it could be due to essentially upcoming rules and regulations that those cryptos wouldn't go under. So therefore, Coinbase has to delist them. So if it is true, that's probably the reason why. If it isn't true, then it isn't true. But I haven't seen that, I'll be honest. Hello, Miles and CMF. Peg, good to see you. How you doing? Share the live. Let's go, Scott. Scare brother. Good evening, Miles. How you doing? I'm doing great. Kelly, good to see you. How you doing? What up, Miles and CMF? Ray, good to see you, brother. How you doing? I got an email and a text message of HMRC advising me about crypto need to pay tax on it. I wonder how they got my details. If you got a text from HMRC relating to you need to pay your crypto taxes, please make sure it's a real text and it's a real government link, because there are a tremendous amount of scams happening right now where people are receiving emails, people are receiving phone calls, people are receiving text messages, from people pretending to be from government organizations asking you for crypto tax money. So in most cases, I'll probably say the text and the email you received is completely fake, but double check it to make sure. Hello, Miles and CMF. Scott, let's go. How you doing, brother? No financial advice in any sort of a way, but there's tremendous amount of scams going around. Please always double check whatever you receive is genuinely from the company, the organization, or the government, because there's too many scammers out there pretending to be from companies, organizations, and governments. Now, US Senate votes to ban CBDCs. We talked about this a few nights ago, essentially on this live, and I explained to you that it's actually a positive in a sense. So, the US Senate votes to ban CBDCs in housing bill that may face trouble in the House. The US Senate has passed a significant housing bill that includes a controversial provision to ban the issuance of the central bank digital currencies by the Federal Reserve, and that's the key part. The Federal Reserve can't be the one behind CBDCs because the Federal Reserve ruined the US dollars because they, were printing it out of thin air. So they should definitely not be in charge of CBDCs. They'll be the worst people to be in charge of CBDCs. And also, the Trump administration doesn't like the Fed because of what they've done over the years. So it explains, why, Trump's administration is also silent and also approving on this message. Proponents of the ban argue that the government-controlled digital dollar could threaten financial privacy and disrupt the existing financial plumbing by essentially competing directly with the commercial banks. This legislative move marks a critical juncture in the utility era, as the old guard of the Senate seek to essentially prevent a shift towards centralized digital ledger controls, effectively attempting to maintain the traditional banking blockade against government led blockchain innovations. The inclusion of a CBDC ban highlights the intensifying political debate over the future of American monetary infrastructure. Privacy protections. Lawmakers supporting the ban contend that a CBDC would grant the government unprecedented visibility into private transactions, a concern that has gained momentum alongside the push for the US Clarity Act. So, government members, being on board, Democrats and Republicans being on board to ban CBDCs. This is pretty much the only topic the Republicans and the Democrats can come to any sort of understanding with, to ban CBDCs. Why are both Democrats and Republicans on board on the idea of banning CBDCs? Is it because they care about your privacy? They couldn't care less about your privacy. The answer to that is the reason why they care is because they care about their own privacy. Being a government worker means that your paychecks will be in CBDCs, which means every government worker will be tracked. You know how the government essentially, everybody has always this vision or this mindset in their head that, we're all being tracked through our phones, through our laptops, through our iPads, and, everyone's listening, the government's listening to our conversations and so on. Well, the government workers were pretty much, a part of that. In a CBDC world, the government workers are on the same level as us. They're also going to be monitored, and their money is going to be monitored, which means no more under the table deals. They could do it if they wanted to, they could receive the under the table deals in Monero, for example, if they wanted to, but then the risks would be higher. Let's not forget the majority of politicians don't even know what a crypto is, and never mind how to use a wallet to launder money. So, that's the only reason the Republicans and the Democrats, for the first time ever in their lifetime, they've come to the same conclusion to ban CBDCs. Now, they think the only party from this that's really being played, the only party that's genuinely being played from the Democrats and Republicans is the Democratic side. The reason why the Democratic side is being played on this, and some Republicans also being played on this too, is because they assume because they voted to ban CBDCs and the Fed is no longer allowed to create CBDCs, they think they've won and that there's no more CBDCs involved. The reality of it is, the law that was passed, the law that essentially was voted on, essentially, got the majority vote on it, it was to stop the Fed from printing CBDCs. There was nothing in the fine print regarding any other entity being able to create CBDCs, which means a company like Ripple could sweep in and create CBDCs, which means the Republicans and Democrats just voted on something they really couldn't stop. But what they actually voted on, the reason why I said the Democrats were played on this vote without realizing it is because it's the Fed has always been on the Democratic Party's side compared to the Republican side. And Trump made that, very clear when he became president of where the Fed stands, even though the Fed says they're neutral and they don't stand with any political party. But we all can see the bigger picture of where the Fed stands and where the chairman stands, essentially. So they're being played. The Democratic Party just got played by voting against CBDCs, which I don't mind because them voting against CBDCs means the Fed can't create, and the Fed has always been on the Democratic side. The Democratic Party just stopped the Fed from printing CBDCs, which means another entity like Ripple could sweep in and print CBDCs. So they definitely got played, but it works out in our favor. Critics of a digital dollar fear it will flip the switches on a system where citizens move deposits from private banks to the Fed and potentially starving the legacy lending systems of vital capital. While the bill essentially cleared the Senate, it faces a steep on ramp in the House, where some essential representatives argue that the ban could stifle the Genius Act goals of maintaining essentially a US leadership in 2026 digital economy. Despite the Senate's decisive vote, the path forward for the ban remains uncertain due to complex political dynamics of the housing package. If the provision survives the House, it would represent a major victory for those advocating for a private sector led digital dollar over a state issued alternative. As the global race for currency supremacy continues, the outcome of this bill would determine whether the United States will prioritize decentralized, high utility private stablecoins, or if it will eventually revisit the prospects of a sovereign digital currency to modernize its national, essentially financial infrastructure, which means even if they ban CBDCs, it's just banning the Fed from creating CBDCs, not other entities from creating CBDCs. And some people might say, no, this means ban of all kinds of CBDCs. It means the US government is not going to be printing CBDCs. It's never going to happen. You've got to come to the realization that the world is moving into CBDCs. And you think what the United States is going to go, no, we don't want to get involved in the world. When has the United States never ever gotten involved inside the world? They always get involved inside the world because they're the number one essentially infrastructure of the world. They're the number one powerhouse of the world. They have the only vote that could veto everybody else's essentially voice. So the idea that some people might assume, no, this means ban on all CBDCs. No, it doesn't. It means that the Fed can't print CBDCs, which is Democratic Party got played. It means that a private entity can print CBDCs, and also doesn't mean that the US will never create CBDCs, because they will, because the world is creating CBDCs. Now, Kathy Woods is what we're going to talk about next on tonight's live. Kathy Woods ARK Invest. Kathy Woods is the female version of Michael Saylor. She loves Bitcoin. She's always backed the idea of Bitcoin. She sees the future of Bitcoin everywhere. So it's interesting that she came out with this perspective today. Kathy Woods says quantum computing is a long-term risk for Bitcoin, not an imminent threat. ARK Invest, led by Kathy Woods, has released a research brief addressing concerns regarding the impact of quantum computing on the Bitcoin network. Interesting timing to release this research paper of why Bitcoin can become compromised on quantum computing, while Bitcoin is going through a battle of energy crisis due to a war in the Middle East. The firm argues that while the development of the Shor's essentially algorithm could theoretically challenge the current cryptographic standards, the threat remains a long-term consideration rather than an immediate crisis. This perspective suggests that the financial plumbing of the world's largest decentralized network has ample time to integrate quantum-resistant signatures, ensuring the transition to a utility era remains secure from future computational essentially breakout throughs. The report also emphasizes that the Bitcoin ecosystem is already preparing for a future of technological flipping of the switches to maintain its integrity. Cryptographic evolution. Orca highlights essentially that the network can undergo a soft fork to implement essentially new algorithms, providing a secure on-ramp for users to migrate their assets to quantum-proof addresses before any practical threat essentially materializes. Hardware lag. The study notes that the current quantum computers lack the abute essentially stability and error essentially correction necessary to break the ECDSA encryption, meaning the legacy banking blockade is likely to face a similar security pressure long before the Bitcoin ledger is compromised, which is true. Quantum computing are not only a threat to Bitcoin, they're also a threat to the traditional banking sector, which is something that doesn't get discussed a lot, because everybody, will always assume essentially quantum computing, Bitcoin threat. It's also a traditional bank threat. I'll explain to you one thing that happened today in the UK. Lloyds Bank, NatWest Bank, and the Bank of Scotland, essentially, Lloyds Bank, Halifax Bank, and the Bank of Scotland today. Something interesting happened on their applications, on their banking mobile applications, which to all of you should be a shocking scenario. Imagine you open your mobile banking app and you do if you're using iPhone or whatever, you do a face scan or a finger scan, and then it loads up into your banking app, and now you're seeing transactions and a bank balance that doesn't make sense. It's your name, but you're seeing transactions essentially that you never did, and you're seeing a bank balance that you don't have. What actually happened was people were seeing other people's transactions and other people's bank balances, even though they logged in to see their own banking balance, their own transactions on their mobile app. And Lloyds Bank, essentially Halifax Bank, and the Bank of Scotland decided to, for a period of time, for hours, essentially, or 30 minutes for some of them, to close down their apps, essentially, that nobody was able to have access to their banking apps, and to fix the bug, they said. A bug. They don't know what happened. That how somebody logging in to see their banking app was able to see somebody else's banking app. And that's before we ever hit quantum computing. So yes, quantum computing is a massive threat also to the traditional banking sense. It's also a threat to Bitcoin. However, quantum computing is not really a threat to the XRP ledger, for example, or to some other chains out there, because they have been testing to become that resilient in a world of quantum computing. Whereas Bitcoin essentially works a little bit more different. It's everybody gets a neutral vote. Trying to get, thousands of people to agree on something to pass it is going to be ridiculous. If you try to get 10 people to agree on the same topic, it's just never going to happen. Never mind, people that you don't know randomly, essentially around the world, all of them trying to approve essentially the nodes to pass this through. So it's going to be a bit of a struggle to make Bitcoin essentially a quantum resistant essentially, and the suggestion that we're miles away from quantum computing is a bit ridiculous too, because we know that it's not just essentially companies that are working, public companies that are working on quantum computing chips. It's also governments working on computing essentially chips. So the idea that we're miles away, it's not true in any sort of a way. And also, this not only puts pressure on Bitcoin's network, but it does also put pressure on the traditional banking sector. That if they don't adapt to a digital world as fast as possible, they will become compromised. We haven't even reached quantum computing yet. And already, some banks on their mobile banking app, you could see cross payments from accounts of who knows who they belong to. Imagine opening your banking app and you see somebody else's transactions or somebody else's bank balance. Now, putting that to one side, regarding quantum computing, essentially, and that the banks are also on the threat of quantum computing, and that some chains are not really under a threat. Asia is what we're going to talk about next on tonight's live. But before we talk about that, let's go into the comment section first. This was happening there, and straight into the next news. So let's see where we're at inside the comment section. We were here. I think, as I previously, this is live, which means if you have any questions, go for inside the comment section. Let's see. Good evening, Miles and CMF Bull XRP. Good to see you. How you doing? Let's go, Miles. How you doing? Let's go. What? That's crazy. How could that even happen? Wow. I agree. Honestly, people were shocked when they opened their banking apps. Is there any way North Korea can give the IRGC, which is Iran's essentially, army, a nuclear weapon? Is there any way essentially North Korea could do that? Yes and no. If North Korea wanted to, maybe try to smuggle it into Iran, but it's going to be difficult because the US forces and the Israeli forces have the highest when it comes to intelligence. I mean, they're way above everybody else, way above China, way above essentially Russia, any other jurisdiction out there. Israeli intelligence is number one in the world. Nobody can beat, when it comes to intelligence, Israel. So even if North Korea tried to essentially, smuggle in some sort of a way nuclear essentially weapons to Iran, Israel will find out about it and let the US know, and then they'll do precision essentially airstrikes on anything that's trying to take and smuggle that into Iran. So could they do it if they wanted to? Yes. Kim Jong Un. I'm guessing everybody's seeing the memes of Kim Jong Un, being sad and miserable, and that the whole world is in the Middle East going to war, and nobody's inviting Kim Jong Un. The memes are quite funny, to be fairly honest. So he's a bit of a lunatic, but I don't think he's that stupid either. So could they do it? Yes. Is it going to work? No, because Israel has the number one intelligence in the world, and they will instantly know if that ever happens, and let the US know, and then they'll do precise, essentially, airstrikes to take out the target. Now, Asia. Asia is the biggest Bitcoin buyer and now wants to further build essentially the BTC ecosystem. So, as essentially Michael Saylor turned strategy into some sort of a Bitcoin corporation, not just a Bitcoin holder, Metaplanet once again is following in some sort of a way strategy's blueprint. So, Metaplanet, often referred to as Asia's answer to MicroStrategy, has announced a strict shift to move beyond mere accumulation and towards activity, essentially actively developing the Bitcoin ecosystem. As the region's largest essentially corporate holder of assets, the firm is looking to leverage its significant balance sheet to upgrade the financial plumbing of the decentralized web. This transition marks a new chapter in the utility era, where the company intends to flip the switches from being a passive investor to a primary engine for Bitcoin native innovation and infrastructure. The firm's new direction signals a deeper integration into 2026 digital economy. Infrastructure layer investments. Metaplanet aims to provide an on-ramp for developers building layer 2 solutions and smart contract capabilities on top of the Bitcoin network, seeking to expand its use cases beyond a simple store of value. Corporate treasury leaderships. By advocating for the old guard of Asian finance to adapt essentially Bitcoin centric treasury models, the company is attempting to dismantle the regional banking blockade and encourage institutional participation. Global strategic alignments. This initiative mirrors the objectives of the Genius Act by promoting national and corporate digital asset essentially reserves while also adhering to the transparency standards expected on the US Clarity Essentially Act framework. This expansion into the ecosystem and building is viewed by analysts as a necessary step for the maturation of the market in the APEC regions. If essentially by fostering a local environment for Bitcoin development, Metaplanet is positioning itself as the central pillar of 2026 global economy, ensuring that network's high utility potential is fully realized, and as more essential corporations transition from accumulation to active participation, the competition to redefine the next generation of financial infrastructure is expected to intensify, with Metaplanet leading the charge for a Bitcoin integrated future in the East. So, Metaplanet, the Asian version of MicroStrategy's company, essentially, MicroStrategy's company strategy, has decided not only to be a Bitcoin holder, but also, do smart contracts, work on the Bitcoin network, create layer twos, and so on. Is it going to be successful? Is the main question. Many people have tried to make Bitcoin's network faster and, bring smart contracts on it and build on Bitcoin's network. Everybody failed pretty much miserably. Bitcoin is only good for holding. That's pretty much it. It really doesn't bring any utility towards the table except 21 million token supply, and that's it. It's just the scarcest essentially asset. 21 million supply, that's pretty much it. That's the selling point. Many people have tried creating NFTs on the Bitcoin network, they tried doing lightning networks on the Bitcoin network, and so on. It all failed pretty much very miserably. Let's in the lightning network scenario, many companies are still trying to, advance that in some sort of a way. Just use the XRP ledger. I don't understand, the miserable essentially footsteps they're trying to take on trying to make something old, modern and essentially fast and reliable and secure. Well, there's alternatives that are already fast, reliable, and secure. It's like having $100,000 and you want to buy a fast sports car with $100,000, but then you see a broken down car for $10,000 and you go to yourself, you know what? I'm going to use my $100,000 to buy a $10,000 car and make it go faster than the $100,000 car. At the end of the day, everybody's going to take the $100,000 car. Nobody's going to be taking the $10,000 car. Some might, but the majority will take the $100,000 sports car because it's faster, it's reliable, and so on. Whereas you could, people for some odd reason want to take the $10,000 car, which is Bitcoin's network, and essentially turn it into a $100,000 sports car. It's just ridiculously stupid. Just don't do it. There's already a reliable, fast, secure, cheap network you could build on, which is the XRP ledger. Why this idea that no, I have to build on this slow, essentially congested network for some apparent reason? Just doesn't make sense. Now, moving on from that to meet Litro, the tokenized crude project to start pilot testing soon for a 2027 debut. A new initiative dubbed essentially Litro is set to begin pilot testing aiming to modernize the global energy markets by tokenizing physical crude oil. The oil industry getting tokenized is what they're trying to do. Oil and tokenization, massive, absolutely massive. This ambitious project seeks to overhaul the outdated financial plumbing of the commodities sector by creating a digital native representation of the oil barrels on the blockchain, by transforming a liquid, essentially commodity, into a programmable digital asset. Litro aims to provide a more efficient on ramp for global trade. allowing for near instant essentially settlements and reducing the friction historically associated with the old guard of energy logistics and the traditional banking blockade. The project represents a significant step towards a utility era of the 2026 digital economy, focusing on these several core objectives: liquidity and accessibility. By breaking down physical oil contracts into smaller tokenized units, Litoro enables a more diverse range of essential participants to engage in energy markets without the overhead of legacy clearing systems. Supply chain transparency. The use of distributed ledger technology allows for the flipping of the switches in how provenances and ownerships are tracked, providing a real-time data that aligns with the transparency goals of the US Clarity Act. Smart contract automation. The pilot essentially will test the integration of automated settlements and triggers, ensuring that the payments and deliveries are synchronized in a way that minimizes counterparty risk and enhances the overall stability of the national financial infrastructure. As the project prepares for its full scale debut in 2027, it has been closely watched as the potential cornerstone of a Genie Sachs vision of a tokenized real world asset economy. If successful, Litro could serve essentially as a blueprint for other commodities, proving essentially the speed and security of blockchain can be applied to the most essential resources of global economy. For market participants, this pilot, essentially a pivotal transition where physical world and digital ledgers finally converge, offering a high utility solution to the complexities of international trade and energy management. Now, it's the first time I've ever in my life heard of Litro essentially, but the idea of tokenization of when it comes to oil, excellent, amazing, incredible liquidity flow, a lot of money is what I'm essentially visioning, what everybody else should be visioning, essentially visioning. Oil equals liquidity flows equals essentially money for us inside the crypto sector. Now, Litro could possibly essentially create their own chain or create their chain on some other layer, or also essentially, use can also even create their own token and so on. So I will keep everybody updated on Nitro if they try to take that route. It could be another Ondo play, for example. So let's just see how that one goes down the road. Now, moving on from that to the SEC and CFTC. The SEC and the CFTC essentially have come to the conclusion that it's better for them to work alongside each other than to go against each other. So, the SEC and CFTC have ended their years of rivalry with deal that could mean a combined crypto oversight. In a historic move that signals an unconditional surrender to the need for the regulatory logic, the Securities and Commission SEC and the Commodities Future Trading Commission CFTC have signed an MOU to create a joint oversight framework, essentially that aims to essentially a joint framework for digital assets. This landmark agreement aims to repair the fragmented financial plumbing that has long confused market participants, replacing years of judicial essentially in fighting with a unified approach. Do you know why this is amazing? Because while the Democrats and Republicans are, going against each other and arguing 24/7 regarding the Clarity Act and regarding the Genius Act, the SEC and CFTC just pretty much said, F that, and we're just going to do our own contract. And the SEC and CFTC just said, you know what, let's just work together while those morons figure out what they're going to do next. Simple, sweet, but by flipping the switches on a synchronized strategy, the two agencies are moving to provide the stable environment necessary for the 2026 digital economy to thrive without the constant essentially of threat of contradictory enforcement actions. The deal establishes a clear path for the maturation of the domestic market and the dismantling of the regulatory banking blockade. Unified asset classification. The agencies will now utilize a shared utility error, a taxonomy to determine whether a token is a security, a commodity, or a hybrid, providing a much needed essentially certainty for developers and institutional on ramps. A streamlined registration. Under the new framework, firms can apply through the single portal that satisfies both the SEC and CFTC requirements. When crypto firms, want to apply for the SEC, they're no longer just applying to the SEC. The SEC and CFTC, with this new contract that they signed, this new MOU that they signed together without the disruptions of the Democratic and Republican parties right now arguing regarding two regulations for the crypto sector, these two agencies coming together come to conclusion that they need to do this and they can't rely on those morons to come to a conclusion. Now, a crypto company can apply through one portal that connects both to the CFTC and SEC, and then they'll get back to them. So, firms can apply for a single portal that satisfies both the SEC and CFTC requirements, a process that aligns with the efficiency goals of the US Essentially Clarity Act. Coordinated enforcements. By pooling resources and data, the regulators aim to better detect the market manipulation of fraud and reinforcing the safety pillars envisioned by the Genius Act for a digital first national infrastructure. As the old guard of Washington, D.C. adapts to this cooperative essentially era, industry leaders are hailing the move as an end of regulation by enforcement. Analysts suggest that this coordination will significantly lower the compliance burden of high utility projects, allowing them to focus on innovation rather than legal defense. For the 2026 global economy, this pact represents a pivotal moment where essentially the world's largest financial markets finally harmonize its oversight, ensuring that the transition to a blockchain integrated future is guided by a single coherent vision rather than a fragmented, essentially institutional rivalries. This is incredible to watch that the CFTC and the essentially SEC coming to the conclusion that they need to just work together and stop sitting on the sidelines waiting for the Republicans and the Democrats essentially come to some sort of conclusion when it comes to the Genius Act or essentially any other act for the crypto space. Amazing, honestly. It's extremely positive for the crypto space. Now, putting that on one side, BlackRock. On the topic of also the Democratic Party and Republican Party regarding the Genius Act or the Clarity Act, we know for a fact that the Democratic side is, obviously weaponized by the banking sector to vote against the Yield Act, essentially for the yield, essentially for stablecoins. However, when it comes to yield and other crypto projects, it's perfectly fine. The issue is only stablecoins for them because, for example, BlackRock debuts the staked Ethereum ETF as demand grows for a yield in crypto funds. It also shows us that there's demand there for yield when it comes to cryptocurrencies. So the market really does want yield when it comes to crypto. It's just that the certain banks don't want that to happen. BlackRock has officially launched a first of its kind staked Ethereum ETF, marking a significant evolution in how institutional investors across the essentially access the rewards of Ethereum network by integrating staking yields directly into a regulated ETF product that the world's largest asset manager is effectively upgrading the financial plumbing for digital assets. This move allows investors to flip the switches from a simple price, essentially exposure, to active participation inside the utility era, essentially providing a seamless on-ramp for those looking to capture network rewards without the complexities of managing validator nodes or navigating the legacy banking blockade. The debut of this product highlights the mature appetite of the old gold essentially for high utility and yield-bearing essentially digital instruments. Institutional yield capture. The fund is designed to bypass essentially the fund is essentially designed to pass staking rewards through to essentially shareholders, offering a regulated alternative to traditional fixed income products within the 2026 digital economy. Compliance and security. By operating under the oversight of the essentially US Clarity Act, the ETF provides a secure environment for this to possibly happen. Market validation is the important factor here because this market validation is not only a validation for yield when it comes to Ethereum, Bitcoin, and Solana, XRP, and so on, but it also shows that the market is ready and the market is hungry and the market wants yield to happen. They want rewards from their cryptocurrencies, is what it shows, which means the market wants stablecoins to have rewards, whereas certain banks don't really want that to happen because they're going to lose billions of dollars. This launch is seen as a major step towards the goals of a Genius Act, as it bridges the gap between decentralized consensus mechanisms and the transparencies required by national financial markets. As Ethereum continues to solidify its role as a foundational settlement layer, BlackRock's entry into the staking space is expected to drive a new wave of capital into the ecosystem. Analysts suggest that the ability to add a native on-chain yield within a familiar brokerage firm will fundamentally change the complexity landscapes for digital fund managers. The simplest way to put that is what BlackRock is suggesting is that people inside the financial sector might struggle with the idea of keeping their crypto with Coinbase, Binance, and other crypto exchanges out there and earn yield because they might not trust it, even though in some eyes they're all quite trustworthy. Whereas if somebody like BlackRock is offering essentially ETF services with yield servicing, essentially staking and so on, that's going to be quite appetizing for a lot of people to jump on board. High profile investors, essentially family offices, hedge funds, and so on. That seems more like a safer option because it's BlackRock and not a crypto exchange for them. So they're suggesting that could bring essentially a lot of liquidity towards the table for now for Ethereum with their staking capabilities, which is a fair point. I said this a long time ago. I said Ethereum should have staking capabilities when it comes to ETFs because that's the only way they're going to be able to sell Ethereum ETFs. Now, Avalanche is what we're going to talk about next on tonight's live. Avalanche business chief says crypto must grow up and solve real problems. Bold speech. Avalanche's business chief is saying this, that crypto should grow up and solve real problems. The head of business at Avalanche has issued a call for the digital asset industry to shift its focus from speculative cycles towards solving tangible, real world economic challenges. In a candid assessment of the current landscape, the executive argued that the transition into the utility era requires a fundamental maturation of both technology and intent. By moving away from vibe based valuations and towards fixing the world's broken financial plumbing, the industry can finally move past the legacy banking blockade and prove this necessity to the 2026 digital economy. You know what essentially Avalanche should do, in my perspective? Fire that moron. Honestly, how can Avalanche's business chief come out and publicly say crypto needs to grow up and that it should be solving real problems? Crypto, companies out there, crypto foundations, developers should be solving real problems and moving away from vibe-based scenarios and speculative areas. Where have you been the past 5 years? Honestly, if I had a moron in my company that came out essentially suggested that, I'll fire him on the spot. Because have you not been paying attention to what's been happening around you? Crypto companies were being sued for the longest time. Every judicial government department turned against them. And while that was happening, some crypto projects decided to buy billion-dollar companies. Why was there no mention from his big, bold speech about Ripple acquiring billion-dollar companies? Why was there no mentions of Ripple acquiring custody firms? Why was there no mention, essentially, of Ripple going international, acquiring licensing? Why was there a mention of him essentially saying Circle acquiring essentially licensings? Why was there no mention of him essentially Paxos acquiring licenses? Kraken is now working with there was no mentions of all the success crypto is bringing towards the table, but just a lot of BS of him saying, oh, and he's the business chief of AVAX, which is the interesting part of Avalanche. Just a lot of BS of him criticizing the crypto space, but not the people that are trying to keep the crypto space hostage. So, what an absolute moron. If I was essentially in charge of AVAX, I would fire him on the spot. While he's making this speech on stage in front of people, I would walk up on stage, tell security to kick him out, and he's fired on the spot. What an absolute idiot. No mentions whatsoever of what the real problem is when it comes to the crypto sector, that we can't get the Democratic Party and the Republicans to agree essentially on a Clarity Act. We can't get them to agree on a Genius Act. We can't essentially stop the banks. We can, but there's a difficulty of stopping the banks, keeping the crypto space hostage. There's other issues happening inside the crypto sector. So no mentions of any of these, but just that crypto needs to grow up. Honestly, the level of idiocy on this is just ridiculous. Now, moving on from the idiot from Avalanche, and I can't believe that came out from AVAX. AVAX is a project that I essentially do respect quite a lot, and I think they can achieve amazing things. But as long as they hire morons like that, they're going to achieve absolutely jack squat. Now, moving on from that to JP Morgan. There's a situation happening with JP Morgan. So, alleged Ponzi scheme victims sue JP Morgan for banking supposed $328 million scam. JP Morgan Chase is facing a significant lawsuit from victims of an alleged $328 million Ponzi scheme, who claim the banking giant ignored red flags while providing essential financial plumbing for the fundamental operation. The plaintiffs argue that the bank's failure to act constituted a breach of its essentially duties, allowing the scam to persist and flourish within the traditional banking systems. This case brings renowned scrutiny to the traditional sector, institutions and their oversight responsibilities, highlighting a perceived vulnerability inside the legacy banking blockade that digital asset provenance argue can essentially solved through transparent on-chain ledger tracking. This shows that the blockchain is better. It's just 10 times better than the traditional banking sense, because this wouldn't possibly be rolling through the blockchain sector unless you're an absolute complete idiot and you could still fall for the same scam. But as at least on the blockchain, essentially, you could see the transparency side of it, so it could maybe open a lot of people's eyes from falling for the scam. But the legal challenge emphasizes the growing demand for accountability and modernization within the global financial infrastructure. Compliance oversight. The lawsuit alleges that JP Morgan's internal monitoring failed to flip the switch on suspicious transaction essentially patterns, a change that essentially comes at a time when the US Clarity Act is demanding higher transparency standards across all financial sectors. Legacy system vulnerabilities. Victims contend that the opaque nature of traditional on ramps allowed the alleged scammers to move vast sums undetected, essentially reinforcing the argument for high utility blockchain solutions that offer real time public auditability. Because if it was transparent, if it was on the blockchain, this really couldn't possibly happen. As one of the world's largest lenders, JP Morgan's involvement in such a litigation underscores the friction points between massive old guard institutions and the rapidly evolving requirements of the 2026 digital economy. As the proceedings essentially move forward, the case is expected to serve as a litmus test for the extent of the banking liability when its services are utilized for illicit activities. Financial analysts suggest that if the courts find JP Morgan negligent, it could trigger a wave of similar lawsuits, forcing a radical overhaul of how legacy firms vet and monitor large scale movements. In broader context, the Genius Act, this event highlights the necessities of a unified regulatory standard that ensures both traditional and decentralized platforms are held to the same rigorous levels of scrutiny and ethical conduct to protect global participants. Two couple of things that are very interesting on this. One, this is happening to JP Morgan, which is probably the main factor that's keeping the crypto space essentially hostage, you could even say, and weaponizing the democratic sector and so on to go against the crypto space, because they will lose billions of dollars if stablecoins offer yields. Two, if JP Morgan loses this lawsuit, this will definitely create some sort of essentially um, a ripple effect essentially of other lawsuits happening where other people are suing their own banks and saying my bank never stopped this scam or that scam. How could they let this happen? How could they not know that this was a criminal bank account that my money was being transferred into? So, and it could create some sort of a massive domino effect of other people suing their banks as well, which inherently makes the crypto space look very attractive, the best way to put it. It makes the crypto space look extremely attractive when lawsuits are flying towards JP Morgan. And if the JP Morgan loses this lawsuit, it's going to cause a ripple effect. And we're going to see more lawsuits popping up, possibly against JP Morgan or other banks inside the United States. And that will make crypto look incredibly attractive. Now, Ripple's streak acquisition is what we're talking about next on tonight's live. In other words, Ripple's footsteps so far. Before we talk about that, let's go inside the comment section first. This was happening then and straight into the next news. So let's see where we were at. We were here. Is there no possibly interesting thoughts? Yep. I love it when you go on a rant. Let's get artistic. Hi, when bull run you think soon? Johnny, good to see you as well. How you doing? Johnny, you gotta change up your questions, but that's the same question every single live show. We need a clarity act, we need a genius act. It's the same response I'm gonna give you every time you ask that question. Now, Ripple, its footsteps since 2023. What they've been doing is strengthening and building a strong foundation for the XRP ledger. Something that, as I was mentioning, the AVAX, essentially moron, I can't believe he's their business chief. No wonder AVAX isn't climbing the ladder, because they have idiots like that working inside the company. So, working inside the foundation. Since 2023, Ripple has aggressively expanded its global footprint through several key acquisitions, aimed at modernizing essentially the world's financial plumbing. By integrating institutional grade custody, providers, and specialized payment firms, the company is transitioning from a messaging layer to a comprehensive infrastructure provider. Those moves are designed to flip the switch for traditional institutions, providing them with a secure and regulated on ramp into the 2026 digital economy, while reinforcing the high utility nature of the XRP ledger as a primary settlement layer. The Streak expansion focuses on building a one-stop shop. You know how X has tried to become the number one app that can do everything. X can pretty much, well, the area for is WeChat, which is in the everything app. Ripple is trying to aim for also the everything app. Not an app, but you get a picture. They're also trying to be aiming for an everything app, but when it comes to the financial sector, for digital asset management and cross-border liquidity, in other words. Metico and standard essentially custody integrations. By acquiring these major custody players, Ripple has secured essential building blocks for institutional asset storage. This allows the old guard of the bankings to hold and tokenize assets within a framework that aligns with the transparency requirements of the US Clarity Act. Expanding the payment networks. The acquisition of firms like Fortress Trust and various regional licensed entities has allowed Ripple to bypass the legacy banking blockade, and these moves facilitate the more efficient flow of capital, ensuring that the XRP ledger can serve as a high-speed alternative to outdated clearing systems. Tokenization and real-world asset focus. These acquisitions provide the technical foundation for the tokenization of real-world assets, and this aligns with the long-term vision, obviously, of the Genius Act and positioning XRP as the bridge currency for the future, where everything from real estate to commodities is traded on-chain. For the XRP ecosystem, these acquisitions signal a shift towards a more robust and resilient infrastructure that is less dependent on speculative retail interest and more integrated into the core of the global finance. Analysts suggest that by owning essentially the custody settlement layers, Ripple is creating a moat of utility that ensures its technology remains dispensable essentially as the world essentially moves towards a digital first economy. As these various entities are fully integrated, the synergy is expected to drive a new era of institutional adoption, cementing the role of decentralized assets in the 2026 global financial landscape. That is what AVAX's business manager, the idiot, forgot to mention, that there is incredible crypto projects out there that don't need to grow up, in his words, that have actually achieved so much also while being under pressure of lawsuits, acquiring licenses, acquiring companies, and so on. The multiple NDAs essentially they have, thousands of NDAs essentially they have. So, and what Ripple genuinely is trying to build, step by step, essentially, is what's been laid out in these articles. Essentially, they're building one of the strongest foundations you could pretty much ever come across inside not just the crypto sector, but also the financial sector. Because Ripple's not only trying to, change how we do payments, but they're also essentially changing how the world operates inside the banking sector by trying to automate everything. So not just making payments go digital, but making paperwork go digital also, making essentially, your money safer and the tokenization sense of it. Everything they're doing is genuinely how they described it, a one-stop shop for everything inside the financial sector, from payments to custody to security to compliance to essentially tokenizations to everything. They've pretty much worked out a blueprint that it's difficult for anyone to replicate. Many have tried and many have failed. And there's a reason why Ripple is going to be worth over $50 billion in valuations. On that note, we have come to the endings of tonight's live as well. Also, this was the CMF live show. Stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations, which I essentially share you the news and I give you my perspectives on them and I break it down so everybody has a better understanding. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And this was episode 456 of the CMF live show. If you watch this for the first time and you followed and subscribed, thank you so much. If you liked and retweet this live show and you watched this on X, thank you so much as well. If you essentially liked the live show on YouTube, thank you as well. If you have comments outside the live, a special thank you to you as well for essentially helping with the algorithms. And if you haven't liked or retweeted, as I said previously, there's a new policy inside the CMF. If you don't like and retweet the live shows, then if you try to message me or call me, I can't provide you essentially, I most likely wouldn't be picking up your phone calls. The best way to put it. So I provide everything for free, never charge a single penny, because I don't believe in the idea of charging people money who are trying to make a better life for themselves. So that's why I've never sold a course and I never will. So the only thing I ask in return is a like and a retweet, not a kidney. And for some reason, it's like when you ask someone from the CMF or from anywhere to like and retweet the live shows, it's like you're asking someone for a kidney transplant. It's just a like and retweet, nothing more. So that's the policy the CMF runs on now. You like and retweet if you want a response from me. Now, before we go, obviously, let's go start a conversation. That's what's happening there, and we'll call it a night. So let's see where we were at. XRP Army, let's go. Best army there is. Hi, when bull run, you think? Oh, no, okay. Do you think we will get yield on stable coins, or do you think the bank will get their way? We will get the yields on stable coins. Good night, CMF. Let's go, Davey. See you tomorrow, sometime as usual. Excellent live, Miles. Thank you. Good night, Miles and CMF. Let's go, Jason. See you tomorrow, sometime as usual as well. Good night, Miles. See you tomorrow evening. Let's go, Callie. See you tomorrow evening, sometime as usual as well. Good night, Miles and all CMF. Thank you for a great live and news. Check out Miles' Substacks, great info. Definitely check out the Substacks as well. If you want an understanding of how the world works, go and check out my Substacks. I release one Substack article a day, and it comes out 12:30 essentially UK time in the afternoon, and morning time essentially for the US times. So definitely go and check them out, especially if you haven't checked them out. One article a day I write, and I basically explain to you how the world works and how it operates and what's happening right now. And I also give you the Miles Nadimian perspective, which is what everyone pretty much tunes in for during these live shows. My perspective. Good day, Miles. Let's go. JP for saying we're going to Substacks. See you tomorrow, but at the same time as usual as well. Night, Miles and CMF. Amazing show tonight. See you all tomorrow. Let's go, Joe. See you tomorrow, same time as usual. Good night, Miles and CMF. Thanks for a great live. Let's go free forever. See you tomorrow, same time as usual as well. Thanks, Miles. Have a great night. We'll watch tomorrow's live after work. Have a great weekend. Let's go. See you tomorrow, same time as usual as well. Today's Thursday, right? Yeah, today's Thursday. For a second, I thought it was Friday because you said have a great weekend. Today's only Thursday. Facts, like, share, retweet, and leave a comment. It is Thursday, right? Now I'm confused. Yeah, it's Thursday. So see you tomorrow, same time as usual. Facts, like, share, retweet, and leave a comment for support. Take care, Miles and CMF. Let's go, Ray, brother. See you tomorrow, same time as usual. Thanks, Miles. Good night, brother. Let's go. See you tomorrow, same time as usual as well. And I'll respond to your message as well, T. No problem. Much respect, Miles. Thanks for your time. See you all tomorrow, CMF. Let's go, Shelly. See you tomorrow, same time as usual as well. Good night, everyone. Let's go, Bill XLP. See you tomorrow, same time as usual. Thanks, Miles. Have a good night. Let's go, Solomon. See you tomorrow, same time as usual. I will see all of you tomorrow, same timing as usual, 10 p.m. long time onwards for the next episode of CMF Live Show. Everyone have a great day or a good night. I'll see you all tomorrow, same time as usual. Love you.